Hi, this is Kim Watson. Welcome to a weekly review, a technical review of the markets. Starting off with the euro dollar, and as you can see, this is a weekly view of the charts at the moment, and we're still pushing in a very tight range. Last week's bar was very much inside the previous day, week, should I say. Coming down to the daily bars, you can see it's very choppy at the moment, and I wouldn't be too surprised to see more of the same for a while. But at some point, it's obviously going to break out. It's I've got this sort of bigger wedge on there. There's a smaller wedge that I'm getting quite interested in. It's just running across these highs here. Now, at some point, well, obviously this wedge is going to break first, and it may give us the clue to the direction of the bigger move. Now that we put in a daily pivot swing there. Is that giving us much significance? No, it hasn't broken and gone any lower to give us a sort of a continuation. As I said in the first place, to me, I wouldn't be surprised if we stay within this range for a bit longer. If we walk our way out of it in terms of bar by bar, we just sort of just poke out through it and don't really have a meaningful move, then we'll probably be seeing more of the same over in the following week. Now, quickly looking at the euro data for this week, and there's German economic sentiment on Tuesday. There's Wednesday. There's very little European news. Going into Thursday, there's a ECB press conference sitting there at 1:30. Of course, we've got before that the European bid rate, which I don't think there's any expectation of changes, but the press conference and the statements that come with it may just create a little bit more excitement. Thereafter, well, nothing till Friday, and even then, is the sort of French and German flash services figures, manufacturing service figures, barely ever do much in the way of movement these days. They used to give sort of 20 pip, 30 pip moves. Sometimes they may give a little bit more reaction, but it's running into the school holidays. It's holiday time. We've seen it today, much quieter than last week already. And I wouldn't be surprised if we see much of the same as we run through this week, unless something's said or done which creates the volatility. So looking at the pound, and last week I was talking about the opportunity for the upside. In fact, if we go to the weekly picture first, and my indicator, which was showing a green buy zone and the previous week, and well, it pretty much happened last week. Now, it's not over yet as far as I'm concerned. Basically, when this indicator does come into play, it does push on further, but it's already done a reasonable chunk of movement. Ignoring Monday, if you look through the rest of the week, there was nearly 480 pips there to be had in the move up to the 21, but it wasn't a straight line. It gives us good opportunities for longs on the daily intraday trading, and maybe swing if you want to use slightly bigger stops. There's certainly the opportunities. From where we're sitting now, though, we've obviously hit the 21. On Friday, it rolled over a little bit, negative today. Today has been a bit more positive so far. It'll be interesting to see how this rolls out, but if we start pushing back towards the 21, I expect this gap that's sort of still sitting there, closing at around about 36.90, just over, to be filled as the next sort of key level to the upside. Support-wise, well, current support sits at this daily 8 moving average. If we start rolling back down towards that, the way it's curling up nicely, you'll see the shorter time moving averages doing the same sort of thing. Just running down to a 4-hourly bar, for example, you can see the 50 curling around quite nicely, which basically is the same moving average as that daily 8. Okay, any possible downside? Well, before we got there is a weekly pivot which hasn't been hit yet, which I do like to see these out the way quite early. There's a high probability of them being hit, and I would have liked to have seen it knocked out the place today, but it may mean that well, it's quite likely we'll see some choppiness over the next few days. Leading to the news for the UK, inflation comes out tomorrow morning. We've got some US data which affect everything, but it's not big US data coming out this week. It's important for the UK though. Wednesday is the employment data. These are really important figures because it will give the Bank of England committee more to go on in terms of what they may need to do. They start seeing a sort of a turn down in the figures here. They're going to be more likely to do something sooner rather than later. But looking through, so that's see inflation tomorrow, Wednesday, employment figures at 9:30. Later in the week, we've got retail sales on Thursday, so busy week this week for the pound. So we could get some decent numbers, volatility there. And on Friday, manufacturing and services PMI. So some really good, certainly manufacturing PMI coming out on Friday. I've just seen a note here. Okay, so we're going to get what sources releasing one-off flash data following the Brexit vote. The data is based on an estimate about 70% of responses. Okay, so we're going to get an early figure coming in on Friday of the manufacturing services PMIs. They're not going to be a full-blown figure, but all the same at 9:30, I think we'll see a bit of volatility kicking around, that extra news coming there. So that's cable. Dollar yen. Well, the yen's continue to soften against the US dollar. Let's just flick through looking at the weeklies first, and nice solid continuation move running from there. Again, the original short low was a signal coming in on my oversold signal coming in there, push it suggesting upside. Now sometimes when these oversides come in, it doesn't move so much. It's done a decent job this time. And looking at the dailies there, well, on Friday we ran into the daily 50, pulled back off that, but it looks to me like this is going to potentially break here. Where to from here then? Well, the 100 MA is the weakest of all the MAs here. I wouldn't be too bothered with them. In fact, I'm just going to look at the 4-hourly chart for a moment and look at where the pivots are. Last week we ran out initially. I'm just going to bring this chart up quite bold. We ran out initially through the week of the pivot there, but managed to close within, which is quite a high probability of doing so. So this week I'm just looking at that same weekly figure. Now again, we haven't yet caught the weekly pivot, and there's a chance that if we see any sort of corrections in the early few days, it will possibly come back towards that sort of level. If not, and it starts breaking up and gets above that daily 50, be looking for the sort of R1 area, 107 to area, and maybe even further up and back into that monthly pivot and the R1 and the weekly R2 there, 109.74 sort of area. Good point of resistance around those sort of levels if it does run up to there, but as it did this week, it could just continue pushing. Okay, in terms of yen news, there's not a lot this week coming out, so it'll be all based on the US, which there isn't significant US news coming out this week either. So as far as I can see, there's the employment claims, which are normal Thursday figures. Nothing of major significance for the rest of the week from the US. So volatility may still be there, but I would imagine that we've got a good chance of a continued move to the upside here. Okay, Aussie dollar. So let's just come out firstly and look at where we are here. It's been drifting more than anything else. I like to see it drifting up. If cable's going up, I like to see all of them running up. The euro's a bit of the oddity, still kicking air. This is still looking from a weekly perspective of got some more potential. However, well, yeah, it's okay at the moment. Actually, I'm just looking at it from a daily perspective where there's a bit of potential weakness. Some people will be looking at the two highs and saying, well, there's a divergence. Well, not really. The RSI came right the way off there. I was more looking at the RSI between the more recent highs here, and certainly from a 4-hour perspective, you'd say there's some sort of divergence, but the time between there, it's a good part of the week between those 2 points, and you would expect, well, not a lot really. real continuation from that. However, looking at this Friday's bar, looking at today's bar, unless tomorrow we can start surging up, well, maybe it's going to be on the weaker side here. I'm just checking there's no overbought signals that come through here. So it's, yeah, there's still some potential looking at this at the moment, this bear flag, that it could roll down, which is not really where I'd like it to be. If cable's going to push up, I'd want it to be running with cable. Right, and finally the Canadian dollar. A sweet old trade to be had today on the Canadian dollar, but let's look at the longer picture, the bigger picture of the Canadian dollar. And when you look at the weeklies, we're still sitting in this wedge pattern here. Now, last week put us in a bit of a negative bar there, spinning top, and well, if we can this week can get some grip and push back up, well, there's a chance. Now, I've got to flick onto oil at the same time here just to show you what's happening with oil. Oil's, if anything, doing a bit of a ball flag from a weekly picture, so got the potential to push on upwards. When you look at the dailies, it looks a real mess, to be fair. The shorter time frame, well, we're seeing a bounce at the moment, which will help the Canadian dollar pull back. Looking at the dailies, they still, I mean, it's difficult to overall read too much into what's here, especially when you just sort of zoom out. It is very range bound. The highs are around about that 130, 132 area. Seem like a key point. It's been up there so many times. If we can get back up to that area, well, perhaps it will push up to the 200. I'd expect oil to be coming off quite a bit for it to be doing that. However, you see this sort of oil bull flag sort of working out, and the Canadian dollar starts rolling over and strengthening again. Look for the break of these lows here, and maybe we'll see something running back towards the bottom of this bigger wedge, maybe down to that monthly S1. Okay, little else here. We're looking at the weekly pivots. Okay, and the picture of what's gone in here. We literally went from the S1 back down to the the R1 back down to the S1 last week, and that pretty much contained the whole movement. They're absolutely awesome for looking at potential reversals, etc. You'll find some more information out on our pivot trading, the pivot trader. But as you see here, we're at the moment just sort of sitting here right on the weekly pivot. Break below that looks more bearish to me, and a close below it certainly I'll be more looking then at the potential for the break of this trend. But as I say, very dependent on oil, the Canadian dollar. Okay, that's pretty much it for me. I will be back next week on this, and I'll speak to you later. Bye for now.